What is going on? Welcome back to Learn About Bit. I've been gone. I've been out of town for the past couple of months. I went to Lake Tahoe in California with my family. We had just a great time. I was running around the lake, running up the mountains, jumping in the lake, eating good burritos, sandwiches, pizza, all that fun stuff. And then for the past 3 weeks, I was in Europe. I went to Switzerland, which was awesome. If you've never been to Switzerland, you got to check it out. Check out the Alps. It was just breathtaking and amazing being up there. And then I went to Italy and Amsterdam as well. I had a great trip, but I'm back and it's back to business. We've had a lot of stuff happen over the past couple of months. We had another assassination attempt. We had a presidential debate. But the main economic news that I want to talk about in this video, and really what I was paying the most attention to, was the 50 basis point cut from the Federal Reserve. We know that the Fed had the fastest rate hike cycle in history. They haven't raised the federal funds rate in many of the recent Fed meetings this year, but for them to come out and cut by 50 basis points in September, not 25, but 50, I think it tells us a lot about the state of the economy. And it's a big switch, right? We've been at this near 5.5% on the federal funds rate. Now we're a little bit lower, and it seems like the Fed is going to cut more in the remainder of this year and heading into next year. And when the Fed cuts the federal funds rate, that is an inflationary sign. It means that borrowing just got cheaper. So when we got the news that there was a 50 basis point cut, we saw asset prices head higher, Bitcoin headed higher. Bitcoin right now is actually around $66,000. It's heading up, which is great news for me and anyone who holds a lot of Bitcoin. We saw the stock market respond positively. The stock market moved higher. Gold moved higher. Gold's above $2,600 per ounce right now. So as the Fed shifts to a looser monetary policy, we'll see if they're able to continue shifting that way. That means that assets are going to head up because the dollar is heading down. But we also got to think about, why did they decide to cut 50 basis points? That's a little bit of a red flag to us, people in the United States. They must have seen something that caused them to worry or maybe scared them in the economy. And that's something we need to think about, right? Throughout this year, we have seen signs that the economy is weakening. We've seen these continued reports of bankruptcies, continued reports of layoffs, something that I've talked a lot about on here. And we've seen the unemployment rate rise significantly. I think we're at 4.3% on the unemployment rate, unless we've got new data, and we might have. I haven't really been paying attention to that over the recent days and weeks because I've been on vacation. But maybe the unemployment rate is higher. And we also have to keep in mind that these numbers that we get from the government are not 100% accurate. The Fed and the government typically like to put numbers out there that look good to the public, that are optically pleasing to the markets. And then sometimes they'll go back and revise those numbers. And that's not as much of a headline, right? We get that jobs number every month, and then secretly they go back and they revise that jobs number, which is the amount of jobs that are added. They revise it lower. So just something to keep in mind with government data. I talk about that all the time, not 100% accurate. But we have definitely seen signs that the economy is slowing, and I personally think we've been in recession for a while. I guess there's like a technical definition for a recession out there. I think it's 2 quarters of negative GDP growth in a row. I'm not 100% sure. My definition of a recession is when we are seeing the economy contract. So when people are getting laid off, when businesses are going under, when people don't have enough money to afford things like groceries or rent or the things they need to buy, right? We're not seeing the economy grow. That's my definition of a recession. So I think we have been in a recession for a while now. And I think the Federal Reserve is just seeing more data that the economy is not doing so hot. So they're trying to provide some support to the economy by lowering rates. The Fed believes that if they lower the federal funds rate and it becomes cheaper for banks and financial institutions to borrow with each other, that this will have a trickle down effect into the economy and we will see lending rates fall. And when lending rates fall a bit, it's easier for people to take on loans and take on new projects or send their kid to school or buy a house or refinance their loan. But something we need to keep in mind is that if the Federal Reserve continues to cut the federal funds rate and we see inflation tick back up, maybe they add stimulus and liquidity into the economy in other ways, and we get back to, let's say, that number of 9% inflation that we saw that really scared the government and everyone, we're probably going to see lending rates stay high, because if inflation is at 9%, lenders aren't going to be lending out money at a 4% interest rate. They're going to want to pace with inflation or beat inflation with their investments. So they are going to require a higher lending rate. So if we do see inflation tick back up significantly, and we caught a glimpse of this when they cut 50 basis points, we saw asset prices head higher, Bitcoin, stocks, gold, all heading up, then this is a sign that we could see inflation tick back up a lot higher. And I wouldn't be surprised if it does, with the deficits we're running and the amount of money that the amount of liquidity that the government is going to need to introduce to basically pay for these deficits. So let's look at this situation that we are in. On one hand, we have the Fed, who is switching to a looser monetary policy. So that's bad for the dollar. We saw the dollar fall on this news that they cut the federal funds rate, and it's good for assets. But on the other hand, we have a weakening economy, right? Why did they cut the federal funds rate? Because they're seeing that the economy is struggling. And it's not just here in the United States. We just got news that China is going to be introducing more liquidity into their economy because they're seeing a drop off in demand for what they are producing. They are seeing their unemployment rate rise. They're having problems with their real estate sector. We know that big real estate players like Evergrande had issues with their debt over the past year or so. So it looks like economies across the world are looking to move to a looser monetary policy to support their weakening economy. So what assets can we be in to benefit from this situation? If we look at equities, I personally am not a fan of equities just with all the uncertainty out there. Equities are businesses, right? Businesses are reliant upon customers coming in the door and buying their product. If we're seeing the economy contract, we're seeing unemployment rise, we're seeing people getting laid off, businesses go under, that means that a lot of people have less money to spend. And when they have less money to spend, that means that they're not going into the Apple store and buying accessories. They're not going into a jewelry shop and buying a nice necklace. They're focusing more on the things that they need rather than the things that they want. They have to be more conservative with their money. I also think there are other risks in investing in the stock market in times of economic weakness. For example, a lot of businesses have loans, mostly all of them, and businesses have the potential to go bankrupt. And it's difficult to know what's going on in the background of these businesses. Up front, it may look like a business is thriving, but maybe that business has made bad investments. Maybe they are unable to pay off a loan, especially if they're seeing less demand from their customer base. So in a time of economic weakness where we're seeing the economy contract, I just think there's better places to be. One other thing we have to keep in mind is that we are seeing the yield curve uninvert. On the news, when the Fed cut the federal funds rate by 50 basis points, we saw a lot of demand for short-term treasuries. And with that, we saw the short end of the curve, those yields start to fall. And we're seeing the long end of the curve, those yields are starting to rise. Typically, when the yield curve uninverts, this is a sign that we are headed towards some economic turmoil and that we are heading into a recession. So to put it plain and simple, I just don't think businesses are the best place to invest in a time when the economy is weakening. I think that safe haven assets like Bitcoin or gold are probably a better way to get that benefit from that dollar debasement, right? When the dollar goes down in value, we see safe haven assets typically rise higher. And you also don't get that counterparty risk that you get with stocks. So let's look at Bitcoin and gold. You know, I love Bitcoin. I'm a big proponent of Bitcoin. And one thing to keep in mind is we do have this election coming up. Bitcoin is a volatile asset. Who knows? We could see a correction in the Bitcoin price over the next couple of months, especially if Kamala Harris wins the election. We know that Donald Trump has come out and voiced his support for Bitcoin in the Bitcoin space. And I'm sure this is leading to some extra demand for Bitcoin. If we get to the election and he loses, then we could see some people sell out of Bitcoin just looking at the future outlook for the space and thinking that maybe it doesn't look so bright. So, who knows what happens over the next couple of months with Bitcoin? Typically, 6 to 18 months after the halving, when we look at the history of the Bitcoin price, it has performed very well. We are just over 5 months since the last halving. So, that is a positive catalyst. I think that in the near future, we are going to see the Bitcoin price head higher, and we're at least going to head above that 6 figure mark. I think a lot higher, but we will just have to see. And I am also a long term holder. If we get a correction in the next couple of months, that doesn't bother me that much because I can just buy more. I'm in it for the long term, and I'm thinking a couple years out, and I'm also thinking the rest of my life. Like, I think that Bitcoin is potentially a tool to build generational wealth for me and my family. So I'm not concerned about things over the next couple of months. If we do get a Trump victory, I think that we will see the Bitcoin price head higher just because anytime we get news that Donald Trump's probabilities of winning the election have headed higher, we see that Bitcoin heads higher. So Donald Trump winning the election is correlated with a higher Bitcoin price. Gold has performed really well this year. It's up from around $1,900 an ounce to, I believe, over $2,600 an ounce right now. I may have to double check that. Let me know if I'm a little off on that. But I believe last time I checked, it was heading higher. It headed higher on the news when we got that 50 basis point cut. And think about gold's performance over this year with the federal funds rate at 5.5%. Around there, gold has performed pretty well. So, as the Fed flips to a looser monetary policy and there's all this uncertainty out there, I think we're going to continue to see good demand for gold, and gold is set to head higher. Now, could it correct over the near term? Yes. It has gone up a lot over the past year, so that's something to keep in mind. But personally, I would feel a lot better in gold than in equities. The one thing about Bitcoin and gold, and I am not an owner of gold for this reason, is that Bitcoin and gold are competing assets. They have very similar qualities. They're both very scarce. They both lack that counterparty risk. I think Bitcoin does a better job of lacking counterparty risk, but we need to keep in mind that when investors look to a safe haven asset, they have a choice between Bitcoin and gold, and obviously there's other assets out there. But if more people choose to go into that gold pile, then it could hurt demand for Bitcoin and vice versa. If more people decide to go into Bitcoin, it could eat demand for gold. So if we see Bitcoin demand really take off over the next year, we could see the gold price fall significantly as we see institutions, maybe governments, individuals move out of gold and move into Bitcoin. And if we head into this time of uncertainty, maybe people feel more safe in gold, then we could see people move out of Bitcoin a little bit. I would say that's probably unlikely because Bitcoiners tend to love Bitcoin. And once you come to understand Bitcoin, typically they stay put. But we could see more people choose to store their value in gold than Bitcoin. So just something to keep in mind. I think that both are probably set to perform well over the next year or so. Long term, I think that gold is not going to perform as well, and Bitcoin is going to eat a lot of that demand, but we will see what happens over the short term. Another asset that I see performing well over the short term are Treasury bills. Now, I'm personally not a big fan of treasuries. I just think eventually inflation is going to run away, and we're going to see the inflation rate outpace these yields on treasuries. And we're going to see people dumping their treasuries. We're not going to see the same demand that we've seen for treasuries in the past. But when we look at the uncertainty out there with the election, the economy, these global conflicts, I see why somebody would want to T-bill and chill, as they call it, for the next couple of months. These short-term treasuries, 3 months, 6 months, a year, they're probably going to be a safer bet rather than sitting in cash while the Fed is switching to a looser monetary policy and we're seeing the dollar debased. It's really never that optimal to sit in cash because over time the dollar is just going down in value. I understand why someone would want to sit in treasury bills and just earn a small yield until there's less uncertainty out there, until the election is over and they know where they want to put their capital. So I understand the strategy with treasury bills. Not a fan of long-term treasuries because I think if you lock yourself in to a treasury bond that's yielding, let's say, 4 to 5%, and the inflation rate is 20% in 5 years, then you're kind of screwed. Nobody's going to buy that treasury bond from you, and it's going to be worth significantly less. You're going to be losing your purchasing power. So over the next couple of months, I do understand the T-bill and chill strategy. That's not how I roll. I sit in Bitcoin. I'm thinking long-term Bitcoin is going to be the base layer for the new monetary system. So I have a long-term mindset, but over the next couple of months, treasury bill is probably going to be a safe bet and better than staying in cash. Now, just to wrap up this video, I think over the next couple of months, you need to keep your eye on catalysts and things that could affect the markets, in particular this election. Anytime we get something that boosts or lowers the probabilities of one candidate winning or losing the election, then we're going to see that reflected in asset prices. So I keep my eye on the news, especially with all the drama out there right now. Another thing I noted a couple of days on Nostr, and if you haven't checked out Nostr, you need to check it out. Decentralized social media, I love it. It's super easy to use. It feels a lot healthier than traditional social media. And you also get paid to post on there. If people like your post, they can zap you some Bitcoin. So check out Nostr if you haven't already. But what I noted on there is that there may be entities and institutions that have significant interest in one candidate or the other candidate winning the election. One positive thing for the Kamala Harris camp that has boosted their probabilities of winning the election is that we have seen asset prices perform very well this year. And I'm sure there's a lot of voters out there who like that and are thinking, hey, people are saying that Trump's great for the economy, but look at the way my portfolio is performing this year. And if we continue to see stocks and other assets perform well leading into the election, I'm sure that that is going to sway some voters towards the Kamala Harris side. So maybe there are people who want Trump to win, institutions who could pull a strategic move or coordinate with other institutions to dampen the markets before the elections. If they think it will benefit them long term, then they could pull this strategic move and try to sway some voters to the Trump camp. But you could also think vice versa. There's probably institutions out there who would prefer for Kamala Harris to win. And maybe they go on a buying spree or try to move the markets higher heading into the election. So just something to keep in mind. There are certain strings that different entities could pull leading up to the election that could impact the market significantly just to try to sway voters. Last thing I just want to re-emphasize before wrapping up this video is there's so much uncertainty out there. I've talked about the election, but we also have these global conflicts, and who knows what happens over the next couple of months. You also look at the bank risk. We know that banks still have a lot of unrealized losses on their balance sheet. Could we see a financial institution fail over the next couple of months, maybe before the election, and maybe that has a significant impact on the election if we get some sort of collapse? Who knows? It's very volatile out there. And you think about something that happened a couple of months ago with Japan. They raised their policy rate by just 25 basis points, and it throws off all the world markets as people sell into yen and sell out of other currencies, other assets. So that's why I'm a big proponent of Bitcoin. It doesn't have that counterparty risk in a very volatile and uncertain world. Yes, we could see the price come down over the short term, but I think with all the uncertainty out there, people start to look for certainty, and Bitcoin becomes a more attractive option. So I think long term, Bitcoin's performing well. Again, equities, we could see them continue to rise. There's certain equities that may perform better than other equities, but I'm not going to take the risk with the weakening economy. I'm not going to bet on business. That's all for today, folks. If you didn't like and subscribe, please make sure to do that now. I think I'm at 99 subscribers, so you could be my 100th subscriber. I feel real good. It'd be special for you, special for the both of us. So hit that subscribe button. If you're interested in getting exposure to Bitcoin, check out my Swan Bitcoin link in the description. When you use that link to sign up today, you can get $10 off your first Bitcoin purchase. Not a bad deal. Thanks for watching. I'll be back soon.